Question 1. Which of the following activities performed by a person for a municipal entity would not typically fall under the definition of a municipal advisor, thereby exempting them from registration with the SEC? A. Providing advice concerning the issuance of municipal securities, including advice on the structure, timing, and terms of such issue. B. Offering recommendations regarding investment strategies and the selection of investment products for the proceeds of municipal securities. C. Engaging solely in the underwriting of municipal securities for the municipal entity. D. Developing and presenting a financial plan for a municipal entity's pension fund, without connection to a specific issuance of municipal securities. Answer: C. Engaging solely in the underwriting of municipal securities for the municipal entity. Explanation: the definition of a municipal advisor specifically exempts a broker-dealer serving as an underwriter of municipal securities. This exemption is crucial because underwriters are subject to different regulatory frameworks under the MSRB and FINRA. While other activities like providing advice on issuance, investment strategies for proceeds, or financial planning without a specific issuance can qualify one as a municipal advisor, acting solely as an underwriter does not. This distinction helps prevent duplicate registration requirements for entities already regulated for their underwriting activities. Question 2. Under MSRB Rule G42, what is the primary duty a municipal advisor owes to its municipal entity client? A duty of best execution for all investment transactions. B. A duty to obtain the lowest possible interest rate on all bond issues. C. A fiduciary duty to the municipal entity. D. A duty to guarantee the successful placement of all municipal securities. Answer: C. A fiduciary duty to the municipal entity. Explanation: MSRB Rule G42 establishes that a municipal advisor owes a fiduciary duty to its municipal entity client. This means the municipal advisor must act in the best interest of the municipal entity and place the municipal entity's interests ahead of its own. This stringent standard requires the advisor to provide advice that is honest, fair, and in good faith, and to manage conflicts of interest transparently. Understanding this core fiduciary obligation is paramount for all municipal advisors. Question 3. A municipal advisor is advising a municipal entity on a new bond issuance. The advisor's parent company is an underwriter that plans to bid on the issuance. What is the municipal advisor's responsibility regarding this potential conflict of interest? A. The municipal advisor must immediately terminate the advisory relationship to avoid any conflict. B. The municipal advisor may proceed without disclosure, provided their advice remains objective. C. The municipal advisor must provide full and fair disclosure of the conflict to the municipal entity and obtain their consent. D. The municipal advisor must advise the municipal entity to use a different underwriter. Answer: C. The municipal advisor must provide full and fair disclosure of the conflict to the municipal entity and obtain their consent. Explanation: MSRB Rule G42 mandates that a municipal advisor must disclose any material conflicts of interest to its municipal entity client in writing. Furthermore, the advisor must obtain the municipal entity's informed consent before proceeding with the engagement or specific advice if the conflict is significant. Simply terminating the relationship or avoiding disclosure would violate MSRB rules. The goal is transparency and ensuring the municipal entity is fully aware of any potential biases that could affect the advice received. Question 4. According to MSRB Rule G44, which of the following is a primary responsibility of a municipal advisor firm's supervisory system? A. To guarantee the profitability of all municipal advisory engagements. B. To ensure that all employees register as municipal securities principals. C. To establish, maintain, and enforce written supervisory procedures reasonably designed to achieve compliance with applicable MSRB rules and federal securities laws. D. To obtain MSRB approval for all advisory contracts prior to execution. Answer: C. To establish, maintain, and enforce written supervisory procedures reasonably designed to achieve compliance with applicable MSRB rules and federal securities laws. Explanation: MSRB Rule G44 requires municipal advisor firms to establish, maintain, and enforce a system of supervisory control and written supervisory procedures. This system must be reasonably designed to ensure compliance with all applicable MSRB rules and federal securities laws. The rule emphasizes the firm's responsibility to monitor and control the activities of its municipal advisor representatives, not to guarantee profits or require specific principal registrations for all employees. Effective supervision is critical for preventing misconduct and ensuring ethical advisory practices. Question 5. Which form must an individual municipal advisor representative file with the SEC for registration? Form U4. B. Form MAI. C. Form MA. D. Form ADV. Answer B. Form MAI. Explanation. Individual municipal advisor representatives are required to register with the SEC by filing Form MAI. Form MA is used for the municipal advisor firm itself to register. Form U4 is for individuals associated with broker-dealers or investment advisors, and Form ADV is for investment advisor firms. Therefore, Form MAI is the specific registration form for individuals acting as municipal advisors. Correctly identifying the appropriate registration form is fundamental to understanding the regulatory landscape for municipal advisors. Question 6. Which MSRB rule outlines general obligations for municipal securities dealers and municipal advisors regarding investor education and protection, including ensuring access to official statements? A. MSRB Rule G17, Conduct of Municipal Securities and Municipal Advisory Activities. B. MSRB Rule G8, Books and Records. C. MSRB Rule G10, Investor Education and Protection. D. MSRB Rule G42, Duties of Non-Solicitor Municipal Advisors. Answer: C. MSRB Rule G10, Investor Education and Protection. Explanation: MSRB Rule G10 specifically addresses the requirement for municipal securities dealers and municipal advisors to provide investor education and protection. This includes ensuring clients receive essential information like official statements and understanding the characteristics of municipal securities. It complements the fiduciary duty by promoting informed decision-making among municipal entities and investors. Question 7. An employee of a bank that acts as a municipal advisor firm occasionally offers financial advice to a municipality as part of their employment duties. If this employee is not separately registered as an individual municipal advisor representative, under what circumstances might this be permissible? A. Never. All individuals providing advice to municipal entities must be registered. B. If the employee's advice is limited to investment banking services. C. If the bank is already registered as a municipal advisor, and the employee's activities are within the scope of their employment and supervised by the bank. D. If the advice is provided without compensation. Answer: C. If the bank is already registered as a municipal advisor, and the employee's activities are within the scope of their employment and supervised by the bank. Explanation: an individual working for a registered municipal advisor firm, like a bank that is a MA firm, does not necessarily need to be individually registered as a municipal advisor representative if their activities are within the scope of their employment and properly supervised by the firm. The firm itself holds the primary registration and is responsible for its associated persons' compliance. This highlights the distinction between firm and individual registration and the importance of a strong supervisory system within the MA firm. However, if the employee is primarily engaged in municipal advisory activities, individual registration would typically be required. Question 8. Which of the following would generally be considered an obligated person under MSRB rules? A state agency issuing general obligation bonds. B. A municipal entity receiving advice from a municipal advisor. C. Any person or entity, other than a municipal entity, who is committed to support the payment of debt service on municipal securities. D. A commercial bank providing a letter of credit for a municipal bond issue. Answer: C. Any person or entity, other than a municipal entity, who is committed to support the payment of debt service on municipal securities. Explanation: an obligated person is defined by MSRB rules as any person or entity, other than a municipal entity, who is committed by contract or other arrangement to support the payment of debt service on municipal securities. This definition often includes entities like private corporations or nonprofit organizations whose revenues or assets back municipal bonds issued on their behalf. Understanding the definition of an obligated person is critical because they have specific disclosure requirements under certain MSRB rules related to continuing disclosure. While a bank providing a letter of credit is involved, the obligated person is typically the entity whose operations or assets are the source of repayment. Question 9. A municipal advisor is engaged to help a municipal entity select an underwriter for a new bond issue. The advisor should not a. Prepare a request for proposals (RFP) for underwriting services. B. Evaluate responses to the RFP based on objective criteria. C. Steer the municipal entity towards an underwriter that has previously provided gifts or entertainment to the advisor. D. Negotiate terms and conditions with potential underwriters on behalf of the municipal entity. Answer: C. Steer the municipal entity towards an underwriter that has previously provided gifts or entertainment to the advisor. Explanation: MSRB Rule G42 explicitly prohibits municipal advisors from engaging in activities that compromise their fiduciary duty, such as steering clients towards specific parties due to undisclosed conflicts of interest or personal gain. Steering a municipal entity towards an underwriter because of gifts or entertainment would be a clear violation of the advisor's fiduciary duty and MSRB G42, which requires acting in the municipal entity's best interest. The other options are legitimate services a municipal advisor can provide when assisting with underwriter selection. Question 10. Which of the following is required for a municipal advisor to be considered independent in relation to a municipal entity client? A. The advisor must have no prior business relationship with the municipal entity. B. The advisor must not be affiliated with a broker-dealer or bank that engages in municipal securities activities. C. The advisor must provide written disclosure to the client of any potential conflicts of interest. D. The advisor must be compensated solely through a fixed fee, not contingent on the successful issuance of securities. Answer: C. The advisor must provide written disclosure to the client of any potential conflicts of interest. Explanation: While several factors contribute to independence, the most direct and universally required action for a municipal advisor to maintain independence is to provide written disclosure of any potential conflicts of interest to the client. MSRB Rule G42 focuses heavily on transparency regarding conflicts. While an advisor may indeed be affiliated with a broker-dealer or compensated contingently, with proper disclosure and safeguards, the crucial element is that the client is fully informed of anything that might influence the advisor's advice. This ensures the municipal entity can make informed decisions about the advice received. Question 11. A municipal advisor firm fails to maintain records of all written communications related to its municipal advisory activities for the required period. Which MSRB rule is primarily violated? A. MSRB Rule G17, Conduct of Municipal Securities and Municipal Advisory Activities. B. MSRB Rule G8, Books and Records. C. MSRB Rule G42, Duties of Non-Solicitor Municipal Advisors. D. MSRB Rule G37, Political Contributions. Answer: B. MSRB Rule G8, Books and Records. Explanation: MSRB Rule G8 specifically outlines the books and records that municipal securities brokers, dealers and municipal advisors must make and preserve. This rule dictates the types of records such as written communications, and the retention periods required for compliance. Failure to maintain these records is a direct violation of G8. While poor record-keeping might indirectly impact compliance with G17 or G42 by making it harder to prove fair dealing or fulfillment of duties, G8 is the rule primarily addressing record-keeping requirements. Proper record retention is fundamental to regulatory oversight and demonstrating compliance. Question 12. Under MSRB rules, for how long must most municipal advisor records be retained? 3 years. B. 5 years. C. 6 years. D. Lifetime of the firm. Answer: B. 5 years. Explanation: MSRB Rule G8 generally requires municipal advisor firms to preserve most of their records for a period of not less than 5 years. For the first 2 years, these records must be kept in an easily accessible place. This retention period ensures that regulators can review historical data to assess compliance with MSRB rules and federal securities laws. Adherence to these record-keeping timelines is a critical component of regulatory compliance for municipal advisors. Question 13. Which of the following statements is true regarding the definition of a municipal entity for purposes of municipal advisor regulation? A. It only includes states and their political subdivisions. B. It includes states, political subdivisions, agencies, authorities, or instrumentalities of a state or political subdivision, and includes their public pension plans. C. It excludes special tax districts and other similar issuers. D. It only includes entities that issue general obligation bonds. Answer B. It includes states, political subdivisions, agencies, authorities, or instrumentalities of a state or political subdivision, and includes their public pension plans. Explanation. The definition of a municipal entity under federal securities laws and MSRB rules is broad. It encompasses states, their political subdivisions, and their agencies, authorities, or instrumentalities. Crucially, it also includes public pension plans and other governmental benefit plans. This comprehensive definition ensures that a wide array of public sector clients receive the protections afforded by municipal advisor regulations, regardless of the specific type of bond they issue. Understanding this broad scope is vital for identifying potential clients. Question 14. A municipal advisor provides advice to an obligated person, rather than directly to a municipal entity, concerning municipal securities. Does this activity require the advisor to register with the SEC? A. Yes, any advice regarding municipal securities triggers registration. B. No, only advice to municipal entities requires registration. C. Only if the obligated person is also a municipal entity. D. It depends on whether the advice directly impacts the municipal entity's issuance decisions. Answer B. No, only advice to municipal entities requires registration. Explanation. The definition of a municipal advisor under the Dodd-Frank Act and subsequent SEC rules generally focuses on providing advice to a municipal entity. While advice to an obligated person might be related to municipal securities, it typically does not trigger municipal advisor registration unless that obligated person is also a municipal entity, or the advice is indirectly provided to or intended for a municipal entity. This distinction is important for understanding the scope of the municipal advisor registration requirement. The fiduciary duty primarily extends to the municipal entity client, not obligated persons. Question 15. Which of the following scenarios would most likely trigger a municipal advisor's registration requirement with the SEC? A. A financial professional providing general economic forecasts to a local chamber of commerce. B. An attorney providing legal advice to a municipal entity regarding the legality of a bond issuance. C. A person who, for compensation, advises a municipal entity on the structure of a new wastewater bond issue. D. A certified public accountant, CPA, preparing an audit report for a municipal entity without providing financial advice. Answer. C. A person who, for compensation, advises a municipal entity on the structure of a new wastewater bond issue. Explanation. The core of the municipal advisor definition involves providing advice to a municipal entity for compensation regarding municipal financial products or the issuance of municipal securities. A person advising on the structure of a bond issue for compensation directly meets this definition. Attorneys providing legal advice, CPAs performing audits, and those offering general economic forecasts without specific municipal finance advice are typically exempted from the definition due to the nature of their services. This highlights the specific activities that trigger the registration requirement. Question 16. Under MSRB Rule G42, what is a municipal advisor's responsibility regarding material risks and characteristics of municipal financial products? A. To guarantee the performance of all recommended products. B. To provide the municipal entity with only positive information to encourage issuance. C. To inform the municipal entity of all material risks, characteristics, and terms of municipal financial products recommended or considered. D. To only recommend products with zero risk. Answer. C. To inform the municipal entity of all material risks, characteristics, and terms of municipal financial products recommended or considered. Explanation. MSRB Rule G42 explicitly requires municipal advisors to inform municipal entities of all material risks, characteristics, and terms of municipal financial products or transactions that the advisor recommends or considers. This responsibility is a critical component of the advisor's fiduciary duty, ensuring the municipal entity has a complete understanding before making decisions. Advisors cannot guarantee performance or selectively disclose information. Transparency regarding risks is paramount for informed decision-making by the client. This obligation underscores the advisor's commitment to the municipal entity's best interests. Question 17. A municipal advisor engages in client solicitation activities, including advertising its services. Which MSRB rule would primarily govern the content of its advertisements and other public communications? MSRB Rule G10, Investor Education and Protection. B. MSRB Rule G21, Advertising. C. MSRB Rule G37, Political Contributions. D. MSRB Rule G42, Duties of Municipal Advisors. Answer: B. MSRB Rule G21, Advertising. Explanation: MSRB Rule G21 specifically governs advertising and other public communications by municipal advisors, setting standards for fair and balanced content and requiring appropriate disclosures. While G42 outlines the general duties of municipal advisors, including when they engage in solicitation, G21 is the primary rule for the content and disclosures within the advertising materials used for solicitation. Question 18. An individual working for a broker-dealer is primarily engaged in underwriting municipal securities. Occasionally, they offer incidental market color and general information about municipal bond trends to a municipality. Are they required to register as a municipal advisor? Yes, because they are providing information to a municipal entity. B. No, because the advice is general and incidental to their underwriting activities. C. Only if they receive separate compensation for the market color. D. Yes, if the information influences the municipality's decision to issue bonds. Answer: B. No, because the advice is general and incidental to their underwriting activities. Explanation: the definition of a municipal advisor generally excludes individuals providing general information, market color, or educational material that does not rise to the level of advice specific to a municipal financial product or the issuance of municipal securities. Furthermore, the underwriting exemption would likely apply to their primary role. The SEC's interpretive guidance clarifies that general information or incidental market commentary without specific recommendations for a course of action does not trigger registration. This exemption is crucial to prevent over-regulation of common industry communications. Question 19. What is the primary purpose of MSRB Rule G37, which deals with political contributions? A. To ensure fair pricing of municipal securities. B. To prevent pay-to-play practices in the municipal securities and advisory markets. C. To dictate how municipal entities manage their campaign funds. D. To promote transparency in municipal advisor compensation. Answer: B. To prevent pay-to-play practices in the municipal securities and advisory markets. Explanation: MSRB Rule G37 is designed to prevent pay-to-play practices, which involve municipal securities professionals or municipal advisors making political contributions to officials of municipal entities in exchange for municipal business. The rule imposes restrictions such as a 2-year ban on engaging in municipal securities business with an issuer, if certain contributions are made. This rule is critical for maintaining integrity and fairness in the competitive process for municipal securities and advisory engagements. It ensures that business is awarded based on merit, not political favors. Question 20. A municipal advisor gives advice to a municipal entity on selecting a third-party service provider, e.g., bond counsel. What is the advisor's responsibility under MSRB Rule G42 regarding potential conflicts of interest with this service provider? A. The advisor must only recommend service providers with whom they have no prior relationship. B. The advisor has no responsibility for conflicts unless they are directly compensated by the service provider. C. The advisor must disclose any material relationships or arrangements they have with the recommended service provider to the municipal entity. D. the advisor must get MSRB approval before recommending any service provider. Answer: C. The advisor must disclose any material relationships or arrangements they have with the recommended service provider to the municipal entity. Explanation: MSRB Rule G42 requires municipal advisors to disclose all material conflicts of interest to their municipal entity clients. This includes any material relationships or arrangements with third-party service providers that the advisor recommends or assists the municipal entity in selecting. The purpose is to ensure that the municipal entity is aware of any potential bias the advisor might have, allowing the client to make an informed decision. Transparency regarding these relationships is fundamental to upholding the advisor's fiduciary duty. Question 21. Which entity is primarily responsible for registering municipal advisor firms and individuals? MSRB, Municipal Securities Rulemaking Board. B. FINRA, Financial Industry Regulatory Authority. C. SEC, Securities and Exchange Commission. D. State securities regulators. Answer: C. SEC, Securities and Exchange Commission. Explanation: the SEC, Securities and Exchange Commission, is the primary federal regulator responsible for the registration of municipal advisor firms and individuals under the Securities Exchange Act of 1934, as amended by the Dodd-Frank Act. While the MSRB writes the rules for municipal advisors, and FINRA provides examination and enforcement services for broker-dealers, the actual registration process for municipal advisors occurs through the SEC's EDGAR system using Forms MA and MAI. Understanding this hierarchy of regulatory bodies is key to grasping the municipal advisor landscape. Question 22. What is the consequence for a municipal advisor firm if it or one of its municipal advisor professionals makes a political contribution in violation of MSRB Rule G37? A. A fine will be immediately levied by FINRA. B. The firm will be prohibited from engaging in municipal advisory business with that municipal entity for 2 years. C. The individual professional will be barred from the industry for life. D. The firm must disclose the contribution in its next Form MA filing. Answer: B. The firm will be prohibited from engaging in municipal advisory business with that municipal entity for 2 years. Explanation: MSRB Rule G37 imposes a significant consequence for prohibited political contributions. The municipal advisor firm is prohibited from engaging in municipal advisory business with the municipal entity to which the contribution was made for a period of 2 years. This timeout provision is a powerful deterrent against pay-to-play practices. While other penalties might also apply, the 2-year ban on business is the specific and direct consequence outlined in G37. This rule highlights the MSRB's commitment to preventing undue influence in municipal finance. Question 23. A municipal advisor representative is considering leaving their current firm to join another municipal advisor firm. What form must the representative file to update their registration information? Form U5. B. Form MAW. C. Form MAI, Amendment. D. Form U4, Amendment. Answer: C. Form MAI, Amendment. Explanation: when an individual municipal advisor representative changes firms, they must update their Form MAI. While a Form U5 is filed by a firm to terminate an individual's registration with FINRA or the SEC for broker-dealers/investment advisors, and Form MAW is for withdrawing a municipal advisor firm's registration, the individual representative files an amendment to their Form MAI to reflect the change of association. This ensures that their registration information is current and accurate, maintaining proper regulatory oversight of their activities. Question 24. Which of the following would not be considered a municipal financial product, for which advice would trigger municipal advisor registration? A. An interest rate swap agreement entered into by a municipality. B. Investment of proceeds of municipal securities. C. A guaranteed investment contract (GIC), purchased with bond proceeds. D. A standard commercial loan obtained by a municipality for operational expenses. Answer: D. A standard commercial loan obtained by a municipality for operational expenses. Explanation: the definition of municipal financial product is specific to certain types of financial instruments and activities related to municipal securities or their proceeds. Interest rate swaps, investment of bond proceeds, and guaranteed investment contracts are explicitly covered. However, a standard commercial loan obtained by a municipality for general operational expenses, not directly tied to a securities issuance or its proceeds, typically falls outside this definition. This distinction is important for understanding the scope of municipal advisor regulation versus general banking activities. Question 25. Prior to recommending a municipal financial product or the issuance of municipal securities, MSRB Rule G42 requires a municipal advisor to obtain sufficient information about the municipal entity to understand a. The political affiliations of the municipal entity's elected officials. b. The municipal entity's specific financial needs, objectives, and sophistication. c. The credit ratings of all competing municipalities in the region. d. The personal investment portfolios of the municipal entity's staff. Answer: B. The municipal entity's specific financial needs, objectives, and sophistication. Explanation: MSRB Rule G42 mandates that municipal advisors obtain sufficient information about the municipal entity's financial needs, objectives, and financial sophistication to provide appropriate and sound advice. This due diligence is fundamental to upholding the advisor's fiduciary duty and ensuring that recommendations are suitable for the client. The other options are either irrelevant, impractical, or inappropriate for an advisor's primary information gathering responsibility. Question 26. What MSRB rule would most directly address the requirement for a municipal advisor to deal fairly with all persons and not engage in any deceptive, dishonest, or unfair practice? MSRB Rule G44, Supervision. B. MSRB Rule G17, Conduct of Municipal Securities and Municipal Advisory Activities. C. MSRB Rule G20, Gifts, Gratuities and Non-Cash Compensation. D. MSRB Rule G42, Duties of Non-Solicitor Municipal Advisors. Answer: B. MSRB Rule G17, Conduct of Municipal Securities and Municipal Advisory Activities. Explanation: MSRB Rule G17 is the overarching rule that requires all municipal securities brokers, dealers, and municipal advisors to deal fairly with all persons and not engage in any deceptive, dishonest, or unfair practice. While G42 elaborates on the specific duties of municipal advisors, G17 sets the fundamental standard of ethical conduct and fair dealing for the entire municipal market. It is a foundational rule that underpins many other MSRB regulations. Understanding G17 is crucial for maintaining integrity in all municipal-related activities. Question 27. A municipal advisor firm has established a formal written supervisory system. Which of the following is not typically a required component of this system under MSRB Rule G44? A. Procedures for the review and approval of all municipal advisory engagements. B. Annual independent audit by an external accounting firm. C. Procedures for ensuring compliance with MSRB rules on political contributions. D. Procedures for identifying and managing conflicts of interest. Answer: B. Annual independent audit by an external accounting firm. Explanation: MSRB Rule G44 requires municipal advisor firms to establish and maintain a comprehensive written supervisory system that includes procedures for managing engagements, conflicts of interest, and political contributions, among other things. However, an annual independent audit by an external accounting firm is not explicitly a required component of the G44 supervisory system itself. While audits may be part of broader financial or compliance practices, G44 focuses on the internal supervisory structure. Firms must have robust internal review processes, but an external audit isn't mandated by G44. This distinction helps clarify the specific requirements of the rule. Question 28. When does a municipal advisor's fiduciary duty to a municipal entity begin? A. Upon the signing of the engagement letter. B. When the municipal entity first contacts the advisor for information. C. When the advisor agrees to provide advice to the municipal entity concerning municipal financial products or the issuance of municipal securities, even without a formal written contract. D. After the first transaction is successfully completed. Answer: C. When the advisor agrees to provide advice to the municipal entity concerning municipal financial products or the issuance of municipal securities, even without a formal written contract. Explanation: the fiduciary duty of a municipal advisor to a municipal entity begins when the advisor agrees to provide advice concerning municipal financial products or the issuance of municipal securities. This means the duty can arise even before a formal written engagement letter is signed, based on the actions and representations of the advisor. The MSRB and SEC emphasize that the duty is triggered by the relationship and the nature of the advice, not solely by a formal contract. This early commencement of duty ensures robust protection for municipal entities. Question 29. A municipal advisor firm hires a new municipal advisor representative. What is the firm's responsibility regarding the individual's registration? A. The firm is not responsible for individual registrations. That is solely the representative's duty. B. The firm must ensure the individual files Form MAI and that the firm's Form MA is updated to reflect the new association. C. The firm must only update its Form MA, not the individual's. D. The firm must contact the MSRB directly for approval of the new hire. Answer: B. The firm must ensure the individual files Form MAI and that the firm's Form MA is updated to reflect the new association. Explanation: a municipal advisor firm has a responsibility to ensure that any municipal advisor representative it hires is properly registered. This includes ensuring the individual files their Form MAI and that the firm's Form MA is promptly updated to reflect the new association. While the individual technically files Form MAI, the firm's supervisory obligations under MSRB Rule G44 extend to ensuring compliance with individual registration requirements. The MSRB does not approve individual hires directly. Registration is through the SEC. This reflects the shared responsibility for compliance within an MA firm. Question 30. Which of the following is an example of an unethical practice that a municipal advisor should specifically avoid under MSRB rules? Suggesting a competitive bidding process for an underwriting. B. Disclosing all fees and charges associated with advisory services. C. Receiving a fee from a third-party service provider for recommending their services to a municipal entity without disclosure. D. Assisting a municipal entity in evaluating proposals from various underwriters. Answer: C. Receiving a fee from a third-party service provider for recommending their services to a municipal entity without disclosure. Explanation: receiving undisclosed compensation from a third-party service provider for a recommendation constitutes an undisclosed conflict of interest and violates a municipal advisor's fiduciary duty under MSRB Rule G42. Such a practice would be considered deceptive and unfair, undermining the advisor's obligation to act in the municipal entity's best interest. Transparency regarding all compensation and conflicts is paramount. The other options are legitimate or required practices for a municipal advisor. Question 31. A municipal advisor provides advice to a municipal entity that subsequently decides not to proceed with a bond issuance. What effect does this have on the advisor's compensation, if the compensation structure was contingent on the issuance? A. The advisor is still entitled to full compensation as advice was rendered. B. The advisor cannot receive any compensation if the issuance does not occur, due to pay-to-play rules. C. Contingent fee arrangements are generally prohibited for municipal advisors. D. Contingent fee arrangements are permissible, but the advisor would typically not receive compensation if the condition, the issuance, is not met as per the agreement terms. Answer: D. Contingent fee arrangements are permissible, but the advisor would typically not receive compensation if the condition, the issuance, is not met as per the agreement terms. Explanation: MSRB rules do not generally prohibit contingent fee arrangements for municipal advisors, provided they are properly disclosed to the municipal entity client. If the compensation is explicitly contingent on a specific event, such as the successful issuance of bonds, and that event does not occur, the advisor would typically not receive that contingent compensation as per the terms of the agreement. The key is transparency and disclosure of such arrangements, not an outright prohibition. This distinguishes municipal advisor compensation from certain prohibitions for other financial professionals under different rules. Question 32. An individual working for a municipal advisor firm receives a modest gift, e.g., a pen, a coffee mug, from a potential underwriter. What MSRB rule is most relevant to this situation? A. MSRB Rule G37, Political Contributions. B. MSRB Rule G20, Gifts, Gratuities and Non-Cash Compensation. C. MSRB Rule G17, Fair Dealing. D. MSRB Rule G42, Duties of Non-Solicitor Municipal Advisors. Answer: B. MSRB Rule G20, Gifts, Gratuities and Non-Cash Compensation. Explanation: MSRB Rule G20 specifically addresses gifts, gratuities and non-cash compensation in the municipal securities and advisory markets. It sets limits on the value of gifts that can be given or received and aims to prevent undue influence. While G17, Fair Dealing, and G42, Duties of MAs, might broadly apply to ethical conduct, G20 is the rule that directly governs the acceptance of gifts. Municipal advisor firms must have procedures to ensure compliance with G20, which typically sets a de minimis value, e.g., $100 per person per year, for permissible gifts. Question 33. Under MSRB Rule G42, if a municipal advisor provides advice to a municipal entity, but a third-party solicitor was involved in obtaining the engagement, what is the MA's obligation regarding the solicitor's disclosures? A. The MA is not responsible for the solicitor's disclosures as they are separate entities. B. The MA must take reasonable steps to ensure the solicitor discloses all required information to the municipal entity. C. The MA must terminate the solicitor's engagement if any disclosure is incomplete. D. The MA only needs to disclose its own compensation, not the solicitor's role. Answer: B. The MA must take reasonable steps to ensure the solicitor discloses all required information to the municipal entity. Explanation: MSRB Rule G42, specifically Section Engaging a Third-Party Solicitor, requires a municipal advisor to take reasonable steps to ensure that any third-party solicitor it engages complies with MSRB rules, including providing all required disclosures to the municipal entity. The MA cannot simply delegate this responsibility, it must oversee the solicitor's adherence to disclosure requirements to protect the client's interests. Question 34. While the SEC registers municipal advisor firms and individuals, what is the primary role of the MSRB in regulating municipal advisors? A. To examine municipal advisor firms for compliance. B. To write rules concerning the conduct of municipal advisors. C. To impose fines for rule violations. D. To directly approve municipal advisory contracts. Answer: B. To write rules concerning the conduct of municipal advisors. Explanation: The MSRB Municipal Securities Rulemaking Board is the self-regulatory organization primarily responsible for writing rules of conduct for municipal securities dealers and municipal advisors. While the SEC registers MAs and has enforcement authority, and FINRA may assist with examinations for broker-dealers, the MSRB is the rulemaking body. The MSRB does not approve contracts or directly impose fines, though its rules are enforced by the SEC and FINRA. Question 35. A municipal advisor is advising a municipal entity on the selection of an investment manager for its bond proceeds. The advisor should perform due diligence on the recommended investment manager to ensure: A. The investment manager is a registered broker-dealer. B. The investment manager can guarantee a specific rate of return on the investments. C. The investment manager has appropriate experience, qualifications, and regulatory standing to perform the services. D. The investment manager will provide a referral fee back to the municipal advisor. Answer: C. The investment manager has appropriate experience, qualifications, and regulatory standing to perform the services. Explanation: As part of its fiduciary duty and standard of care under MSRB Rule G42, a municipal advisor must perform reasonable due diligence when recommending third-party service providers, such as investment managers. This due diligence ensures that the recommended manager possesses the necessary experience, qualifications, and regulatory standing to competently perform the services for the municipal entity. Guaranteeing returns is impossible, and seeking referral fees without disclosure is unethical. The focus is on ensuring the municipal entity receives competent and appropriate service from vetted providers. This due diligence protects the municipal entity and demonstrates the advisor's commitment to their best interests.